And then Wednesday turned into a busy day with lots of news. The overnight session was choppy and sideways, but in a narrow range. The 10-year yields were as low as 4.101, but had pulled back up to 4.12 by the start of the domestic session. The 820 CME Open saw another line of sellers, as was the case on Monday, or so it seemed at least this time. However, it was a large corporate bond offering from GE Healthcare was announced at 8:21 a.m. This was the actual market mover, one which quickly pushed yields several basis points higher. The sell-off in cryptocurrencies deepened as the day went on, sending Bitcoin to its biggest 4-day slump since June. Oil slid on sluggish demand from China. We also had a couple of Fed speakers expressing trepidation on hiking rates too much too fast. Seems like a coordinated effort for some to say A, some to say B, to kind of temper concerns with everybody and keep everybody mellow. U.S. consumers piled on another $25 billion in consumer debt in September, bringing the total to $4.7 trillion. Year-to-date, consumer credit is up $270 billion, the greatest 9-month surge in history. I've been saying for a while this coming recession is going to be for credit cards what the last one was for mortgages. There's also an element of the markets trying to decipher the political results and what it means. MBS were down 14 basis points early. Stocks were flat. The 10-year was down 3 basis points, like I said, starting the day at 4.155. Loan Depot reported earnings yesterday, narrowing its losses as it exits the wholesale business. The company also announced the launch of a digital HELOC program, which it hopes will drive earnings into 2023. Stamford, Connecticut-based luxury mortgage is pausing originations while it looks for a new partner. Starwood was in a deal to purchase the Connecticut lender. However, reports are that they backed out on that. Redfin has sunk to fresh lows as Opco downgraded the stock and its business model to fundamentally flawed. They also announced today that they are closing their iBuyer business. Opendoor and Zillow are also announcing big layoffs, as well as Meta, the parent company to Facebook. Tomorrow brings our latest CPI figures, which should shed some additional light on the Fed's policy moves to date, how it's impacting things, and give an idea of what's going to happen in December. At the end of the day, we were down 22 basis points, landing the 5.5 at 98.63, which is pretty much right on that 25-day moving average. We were well above it for a while, dipped below it, and then pretty much landed right on it at the end of the day. The CPI number is going to make a big determination on how that plays out tomorrow. On some other information, from June 2021 to June 2022, the average residence move was 50 miles away from the previous residence, which is a huge increase. Over the preceding 5 years, it was pretty much flat at a median of 15 miles, which was the highest going back to 2005. So the average person moving 50 miles away is a huge increase. In some perspective having to do with the election, we got a great post today from econ70.com. When the president and the Senate are Republican and the House is Democratic, the S&P 500 averages a 13.7% return. When everything is reversed, which may happen in this midterm, returns average 13.6%. When the president is Democrat and the Capitol Republican, the S&P averages 13%. When DC is all Republican, equities average 12.9%. When it's all Democrats, it's 9.8%. With a Republican president and Democratic Capitol, returns average 4.9%. Some very interesting stuff there.